What's up, guys? Hope you're all doing pretty well today. Welcome back to Mark's Stock Review. This video is going to be on Bloom Energy. I'm going to go over what they do because they are uniquely situated in the hydrogen space. I'm going to list one by one why I like this company and a final take. And as usual, I'll keep my video brief and to the point to respect your time. That said, let's get right into it. Bloom Energy provides on-site stationary power solutions for companies providing reliable, uninterrupted 24/7 power. Step 1 is to use electricity from various intermittent sources to split water into oxygen and hydrogen through electrolysis. They disregard the oxygen but keep the hydrogen. And then when power is needed, for example later in the day, later in the season, or during a power outage, they run it through their solid oxide fuel cell and combine it with air to get electricity without combustion. It's important for investors to understand that carbon dioxide is also a byproduct. However, it is about 50% less. However, it should also be noted that their technology is zero carbon enabled, so that's where they're going to be moving towards in the future. So what exactly are the benefits that Bloom Energy provide? Number 1, they solve the problem of unused renewable energy sources such as solar and wind power via storing it for later use. Number 2, they decrease the cost of electricity. Number 3, they decrease greenhouse emissions. And number 4, they provide guaranteed, reliable, uninterrupted 24/7 power. Their customers are currently commercial and industrial, but they're trying to transition from this niche to the mainstream market. And before I move on, full disclosure, I do not own Bloom Energy yet. My recent trades include adding shares to Hyliion and initiating a position in Solo, Arcimoto, and Candy Technologies. Now I'm going to list reasons one by one why I like Bloom Energy and why it might be a good investment for 2021. Reason number 1 is that Morgan Stanley is bullish on Bloom Energy. It's in their opinion that probably they are the strongest player in the hydrogen economy. Per the S&P Global Market Intelligence, Bloom Energy is the only fuel cell stock to have generated significant positive cash flow recently. Number 2 is their operational efficiency is improving. They have an improving operating margin, which is a key indicator on whether or not a company is going to be successful. And in the case of Bloom Energy, this is showing that the management is controlling costs. Furthermore, they can operate as a quote-unquote essential business, so the crisis should not be a headwind in 2021. Reason number 3, from my point of view, Bloom Energy has a bullish chart. Everything that I read indicated that there was no major negative press releases or downgrades in October that would have given the reason for the sell-off. And as you can see, in early November, investors agreed and stepped in and bought on the technical weakness. Number 4, and probably most important, Bloom Energy has a proven track record of coming through on their products and services. And this is especially important in growing sectors like hydrogen. My final take is that hopefully Bloom Energy can move from a niche market to mainstream. I did read that it takes 8 years for the break-even point for companies to start saving money with Bloom Energy's technology, so they need to get that number down so smaller companies can invest with Bloom Energy. And lastly, I'm not crazy about the current share price as an entry point. In my opinion, I think there might be better price points to enter. I think the volatility between now and the end of the year caused by investors rebalancing, taxes, and politics might provide better points of entry. That does it for Bloom Energy. I hope you enjoyed the video. Please let me know what you think of the company in the comment section below. Have a great rest of your day, and I'll be talking to you soon.